I'm joined by Sean Callow, Senior Currency Strategist at Westpac Banking Group in Sydney. Good to see you there, Sean. Are you bearish on the euro, or do you think actually these European leaders are going to come up with a fantastic solution and we'll all be done by Christmas?
Yes, that would be fabulous, wouldn't it, if they could solve everything by Thursday? And they've sort of put a fair bit of pressure on themselves by saying that they shouldn't have the summit unless they have some sort of solution. So we are very much waiting for that with great interest. We're bearish on the euro on crosses. You mentioned the Swiss franc. That's one where people just don't know how low it can go. The levels that seemed unimaginable before are now being hit. So I think that the crosses, euro yen, is another one getting a lot of interest, but it's probably a little less compelling a euro dollar, I think, because of the dollar's own concerns. Yeah,
we'll go on to that in a minute. Can I just ask you first, did you learn anything really interesting from the European stress tests?
No, this part of the world, at least, I think there wasn't quite such an intense focus on it. I think mostly people are still really concentrating on the sovereign debt issues. So it's all very well to test banks for some degree of a deterioration in sovereign debt, but I think people are really more interested just in the sovereign debt itself. So they can sort of work out ramifications after that. Of course, they would assume that if there are very big haircuts on Greek and other peripheral debt, that it will of course damage plenty of banks in Europe. We sort of knew that part already.
Despite the potential horrors that could well be circling around us here in Europe, the euro still has remarkable support around 140, 138 to 142. What's giving it that support? Is it the inherent weakness of the dollar, or do you see the dollar returning now?
Yeah, look, I think a couple of things. One, I think that there is a significant vested interest and incentive for the holders of European debt to make sure that there isn't a collapse if they can do anything about it. So, of course, about this time last week, we had talk that China was an active buyer in peripheral European debt markets. So whether that's true or not, of course, they have plenty of incentive to maintain stability in both European debt and in US Treasuries. So they wouldn't want to see the euro collapse and a whole flight out of the Eurozone. But as you note, the US dollar, of course, last week we had Ben Bernanke's semi-annual testimony, that coming only a few days after that awful payrolls report. So yields very much under pressure in the States from an interest rate outlook point of view. There's no chance of a rate hike in a tighter policy in the US for really what looks like a very long time, and of course the risks are the other way.
And what about the yen? You mentioned it a little earlier. Do you think it's going to hit 77, and do you think the Bank of Japan will actually go in there and start selling?
Well, they certainly picked up the rhetoric last week. Even just 1 week ago, they were playing down talk of a dollar yen. They're saying it's dollar weakness, etc. But soon after that, we started to get a bit of tension on dollar yen, and the finance minister and some cabinet secretary have made comments to indicate that they're not too happy. I think that, again, it's not really about the level; it's about the violence of the move. So March, the March earthquake and nuclear concerns, I think, were the epitome of when a central bank should intervene. So I think that was a very successful episode. But we're really a long way from that. Dollar yen has come off quite a bit, and some of the price action has been messy. But I think if it's a reasonably gradual move to say 77, then I don't think that would warrant intervention.
Okay, Sean Callow from Westpac. Really good to talk to you. Thanks for joining us live from Sydney.